The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday. Let me just finish typing this here in DU. This Thursday, the 21st, and we're looking at the Dow. Down 92. It was down much more earlier on because Walmart, let me just see what Walmart's doing right now, took a dive. It made this double top, 105.30 February of this year. Slumps down to 80. Rallies all the way back to 104.72, less than a point away from the all-time high, and then pulls back. These double tops are incredible because I've seen them so often. Where was I've been writing these things down over the last couple of days. I'm going to go. So what? So this is in the retail, but let me just go to this because I had questions about it. I'll go to the general market in a moment. I just had a question about TJX. Someone said, do I think it's going to go much higher? Well, look at this. Monthly chart of TJX. This is TJX, Home Goods, Marshalls, a leg D in the monthly chart. It's only a leg C in the weekly chart, so it should still go to a D. And it's gone to a spike up to E, and it's kind of filled the gap this morning. Not filled. It went into the gap and it's come back a little bit. It's up 30 cents at 138.63. Yesterday it went right to the 140s. That was a huge move. I mean, tootling along. What's today? Thursday. So Tuesday, toodle, right there in the 133, 134 area. Whoosh! Yesterday it goes to 145.58. 145.58. Just put that in, 145.58. Outstanding action. So it's so interesting because in the retail sector, look at this, TGT, Target, the exact opposite. It's like a mirror image. TGT, there it is. Look at that on the way down. Whoosh, on the way down. Now, this is a particular pattern. I don't want to take time now. This is a pattern that I talk about. This is almost like the inverted falling axe formation or the dreaded H. So the target better hold 90. It's at 97 right now. And going into middle of September, especially with school coming back and everything. Ooh, otherwise, that's a real problem. All right, let's get to the market. Okay, Dow is now down 94 at 44,842. S&P is down 11. Not bad. Coming back from earlier on. Above yesterday's low. It's at 63.84. I'm going to discuss this in a moment in greater detail. Just let me first finish these. QQQ Index 100 trading vehicle way off the 583.42 high of the 13th of August. It's at 564 right now, having gone down to just under 560 yesterday. So that's rolling over. This is the daily. The weekly charts are still spectacular. IWM, I hope it's coming back. Yep, it's now only down 23 cents, 225.27. Will it go to 231.46 for that leg D? Will I take time? Tomorrow's Technical Friday. I'll spend a little more time on this. Let it play the day out. I would love to see in this environment, with a real mixed environment, I would like to see that by Monday or Tuesday, instead of pulling back and slipping under 222, it actually pushes and closes above yesterday's high of 226.38. That'll be nice. All right, let's get on. We've got the SMHs, semiconductors. They're trying to rally. Nope, they couldn't. They're down 54. They're down 44 cents at 288.57 off the 302.98 high of about the 15th or so. And we'll do a notation on this later in the show. Let's go to the gold. Now, this is fascinating. Look, gold down $2 at 33.86. Inside track. Right here, this is the propellant zone, still working its magic, except I think it's starting to run out of energy because it must not close. Let's see, the low yesterday was 33.53.4. Yeah, I'm still going to say a close below 33.50 would be a big problem. Now let's go on to something that's even more important, because the miners have been doing well. Look at this. The miners have broke out to a new recovery high at 58.91, up 59 cents. That means that this is a G in the weekly chart, but really a G is hardly ever that you get tops at Gs. It doesn't happen very often. So I'm thinking alternate count, E/A, F/B, G/C. I'm keeping it as a G right now. But you remember we discussed this when I was interviewed by Tommy the other day. I mentioned how often we've seen the weekly chart have two bars in the inside. This technique that I discussed, I did it when I was doing my webinar just recently about trends and how you can identify trends. And what I had said was, after the second week of going into that inside track repellent zone, the GDX pulled back very sharply to the 14-period moving average. Then it went higher to a peak D, and 2 weeks. Third week later, saw a red candle, and it went down to where? The 200 period, to the 14-period exponential moving average. Now, this is the third week, and instead of pulling back, it's gone higher. That's a change, and that's the reason why I've been saying, yes, a little bit taken off because of money management, but no, I don't see anything wrong with this. I'd like to be holding positions, and so far, the GDX has held very well. Now let's go to silver, because a lot of people have been speaking about silver. Silver is slightly different, but it's still the same story. Yeah, take a little bit off money management, but I still think that weekly chart at peak C with a 9-period moving average way over the 14, the MACD good, the stochastic not so good at 75%, on balance volume pulling back. Relative strength is holding quite nicely. I think that silver should still try to move higher. But I'll just make it really important. 36.50. 36.50 is the key support for the next 2 weeks, right, in silver. And let me go on to high-grade copper. High-grade copper is trading up 0.006, just not doing very much at all. I'm missing something here. I did want to do this real quickly. Look, dust wheat, just keeps making lower lows and lower lows and lower lows and lower highs, except today it popped up, and it's still weak. It's down 1 at 504.5. But this is the first time that I'm looking at the MACD crossing positive before it deflected lower. This time it's crossing positive. The relative strength is holding okay. The stochastic is just trying to get out of the teens and going to the 20s. It's a 1635. On balance volume is still very weak. Weekly and monthly charts are just horrible. But this is the first sign that I can see that at least there's an attempt that if it's able to, today's highs 511.5, if it's able to get to 514 and 3/4, anything in the 515s would be really important. Let's go to soybean. Soybean continues contract holding very nicely. This is in a buy signal. I'm almost close to saying that if it can get to, it's a 1,046 up 10. If it can get to 1,056, I'm going to say that soy is in a buy mode in the daily chart. Not yet. It's got good ingredients for it, but it's not there yet. And one last thing will be corn. Corn is trading. This is just starting to improve. I think that corn has at 384.5. I think it has a chance to get to the 388 area, and that'll be really positive. I'll be back in a moment. The Dow is down 93. The S&P is down 9. Basil Chapman, Tiger Technicians Hour. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, so look, the E-mini has just gone peak C and leg D. So this is the way I'm looking at the market at this particular point. Am I ready for that? Did I do it? Yes. So first of all, I got a question here. Let me just move that away. There it is. I've got a question here. If I could look at, where did it go? SRE. Basil, SRE, please, I am long. So Zip, I like this very much. Now, I'm going to do for tomorrow afternoon, after the market closes, I'm going to do my usual video, which is almost like a webinar in a sense. My video for subscribers to my opening call. I'm going to spend some time looking at the energy mostly the related to data management, data resources, etc. I think it's really important, and this might just be the time to see it. Many of them have recently made highs, or they're up there, but they're holding very well. So a question came in here about Sempra, SRE, Sempra Energy. This is energy infrastructure, distribution, natural gas, electric. This particular pattern, one day I should make a little video on this. This particular pattern where you come from a high peak F or whatever it is, DEF, but a pretty serious high, and you have a really sharp pullback, and then you go to about 50%. What happens next? So in this particular instance, I'm looking at the monthly chart. This is gray leg B because the stochastic is still very weak at 48%. The MACD hasn't turned up. The relative strength index is doing very nicely. The 9-period moving average did go pink just briefly, and now it's back to green. So the bias is towards the upside, but it would have to be a very sharp V-shaped pattern to get back, and it does that very often. And it's a leg C in a rectangle formation, the gravy cup, the one that's lopsided from the low that was made. Now it's making higher highs and higher lows, basically looking at a peak A, B, and a leg C. And the daily chart has gone to the rectangle formation. By 1 penny, it went to a peak F, then it's retested it, but it's kind of sideways. So this is a digester phase with the other technicals weak, but the 9-period moving average is strongly over the 14. I like it very much, and I'm going to recommend you hold this as a long position. It could pull back. It's at 82.61. If it does close under 80 in the next week, that's it. Just be careful. It's going to be digesting. But basically, this is in a bull phase. The daily chart is in a digestive phase at recent highs. The weekly chart is just kind of sideways, sidling along, using up time, trying to rebuild energy. All the technicals are good, but the price hasn't really popped to 85, which it should do. I like it, and I'm actually going to put it on my list for tomorrow. In fact, SRE, I'm going to include it in what I'm looking at and why I'm looking at it. All right, so that's that. Next question came in, and I'm going to just get to them right now. I wrote these things down. Let me just do what I want you to do. And before I forget, CEG, and I can't remember who asked the questions. I didn't write them down. I just wrote down the symbols. CEG is constellation energy. So look, you look at the monthly chart and you say, is this really a brand new? Is that A, B? This is more like a C than anything else. Let's just put it in as a C in the monthly chart. The daily is in a possible D, but it could even. This is one of those very few stocks that has the pattern itself is so clear, but the notation is a little fuzzy. So I'm not going to use the notation here, even though 357 round number high was made back in, I guess, the 1st of August or so, and now it's pulling back sharply. So this is in a digestive phase, a sell mode in the daily chart. Just not even a sell signal in the weekly chart, and the monthly chart still looks great. Constellation energy, I like it very much. I haven't put it into the same category yet, but I am going to put it down. Yeah, it's too many to look at in one session. I'll whittle them away. But this is good, but it's digesting gains, and that weekly chart really looks like it wants to pop it wants to slowly climb towards the 360 level, but it has to hold 300. A close under 299 will say, taking a little bit longer time out, but so far pretty good action. All right, next question came in. Symbiotic, I always talk about this one. We had huge gains, and then we got out of it, and I never got back in for the move back. It was 64.14 in July of 2023. We were in it between 21 and 18, and we got out. We made a nice gain, but wow, we just we took chunks off and never got back in. And then it went right back from the back into the 17 area. It runs all the way back to even a higher high. It goes to 64.16 by 2 cents. These double tops, man, I have to tell you, these monthly, look at this, monthly July of 2023, down to, I think it was August or so of 2024, and whoosh back again, and then down. So this to me is a watch. This is some symbiotic end-to-end AI, robotic warehouse automation systems. This is on my list, but I'm having patience now for the next pullback. But I think that having shown me that it had the tenacity to go all the way back to the high, says that it's in play. But I'm going to wait. Next thing, I had a question about Palantir, PLTR. I said, be careful. That one had a round number 109. How many stocks have the round number highs? 190 all-time high back in early August, and then yesterday it hit 142.34. Today it's up a penny at 156.04. It's still in play. I still consider this to be a C. I could give it an alternate count. I'm calling it a peak C in the weekly, leg F in the monthly. Palantir Technologies. It will be back in play. It just goes in and out of fashion. When it's out of fashion, you've got to be a little careful. But when it's back, it just screams to the upside. Next thing I wanted to look at here was, no, I'm not going to do that. AARK. AARK. What was the question about this? Oh, when would you get into it? So, ARKK. ARKK is this is ARK Innovation ETF, and Kathy Wood. It's her fund, and it's made another big reversal from a double top 79.19 in July the 21st this year. It pulls back sharply to 71, screams back up to where? 78.76, less than 50 cents away from an all-time high, and now it's pulling back. Peak C1, C2, I'm calling it in the weekly chart. I like this. I'm waiting at least to tell subscribers when they can get in. Let's see. The next thing I want to look at is, got it. I've written it down. Fine, Thursday. Oh, PAVE. P-A-V-E. P-A-V-E is talking about double tops. It went to the 47s, pulls back to the 44s, bounces up to 47 again. Now it's pulling back from a peak D. I like this very much. This is Global X U.S. Infrastructure Development ETF. We did not get into it, even though I spoke about it enough times, but this is one, to me, that looks very enticing. Just have a little patience. And as we go to the break, I want to look at NBIS.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, so let me just do this because I see in the Tiger YouTube, the monthly chart of wheat, it shows a leg H. There's never an H in the Chapman methodology. You have to go back and see whether or not there was a change that would make it a D or an E or something like that. So look what happened. That was a G right there. The next trough, so this is a G/B because that peak A ran up to peak A and became an A minus, the dreaded H pattern. That becomes an F. That becomes a G/B because that is F/A. That becomes the C because it's never an H. And there's your D. So we're in trough. We're in a leg, not a trough. It's still a leg until it makes a higher low in wheat. Okay, now what was I looking at before? I was looking at NBIS, Nebius Group NV, AI, Cloud, GPUs, has a spectacular move from 1034 in October of 2024. And it screams up to 75.96, and then there's a round number high, the following session after peak D. Pulls back sharply, but look, the 9 is above the 14. So this is one out of this whole AI crowd. And if you look at AI, look at this, AIQ. AIQ is taking quite a beating, look. And we've taken a lot from our second trading position. We've still got a call from way down. Right down there, you can see we've still got that long. But then we had positions, trading positions. We've taken quite a bit off, only got a little bit left. And now what's happened is 45.77 is a sharp doji candle with a silent doji the next day, turnaround, which says 9-period moving average. This tells me the daily AIQ, Global X Artificial Intelligence ETF, is in a sell signal right now. The weekly looks fantastic. It could be an instant restart unless it takes out by 1 penny the low of the week of the first at 43.20 and leg E. So let's go back to Nebius, NBIS, and you can see that it's really holding well. So maybe a sell signal in the daily. I haven't got there yet. But this is just a decent pullback after the gap up. It did go into the gap, but it's really back up. And leg D, maybe a peak D by tomorrow. I can't see it getting to 75.97 to extend leg D. So I think this will be a peak D in the weekly chart, and the monthly is only in leg B. So there are some that are actually doing very nicely, right? So I mentioned, I can't remember who asked me about that, but I did want to mention it. Meta, MET. I just want to get these out the way in this section of the show because sometimes I forget. 796.25 was Meta's high. That was just 5 sessions ago, and with the doji candle. And it's gone into almost a sell signal in the daily chart, but that weekly chart going very quickly from a D to an E and then failing says to me, just be a little careful. It looks to me like Meta is taking a breather, just a breather at this particular point. If it closes under 710 in the next 2 weeks, that's a problem. Now, let me go through this because I wanted to do that. And then the very next thing would be, and this is what I'm going to be discussing with you can become a subscriber and then listen to all these webinars that I have, all the videos that I have every week, Friday afternoon, or maybe a Saturday morning, but usually Friday afternoon. I get them done in time for you to listen to them if you're interested. And I go through all the positions we have, and then I go through what is very interesting and what we're looking at. So in this particular instance, what I'm looking at is, you see the VIX index right now? The VIX index is up 55. Still way down at the lower end of the range. There was that big spike that happened in 2 sessions that went to 21.90. I said, no. I want to see prices come down, and then the VIX starts to gather momentum. So this is what I'm looking at. And the reason why I've wanted us to be, for subscribers, to at least have a position on the short side in the general, one of the indices, is because as I'm looking at this now, what I'm really looking at is that, now let me just go back. I'll use the S&P because that's the broadest indicator. All right, S&P. It has the NASDAQ stocks, it has the Dow stocks, it has everything, right, the 500. So as I'm looking at it, there's nothing to see here that says, oh my God, this is really bad. But what is happening is, look, the MACD is deflected lower. The stochastic's gone from very positive, way above the 80% level to 75%. The on-balance volume is pulling back. The relative strength is tucked in over there and it's starting to pull back. So the only thing that's really keeping it up is the 9 over the 14. That's good enough for me. But at the same time, if by the end of the day, instead of closing, say, up 8 points or something or more, we actually accelerate and close down about 18 or 19, and that follows through tomorrow. It really, by Friday afternoon at the close, that's important. So whatever happens from here is very important. Why? Because if we take out on a closing basis into tomorrow's close, Friday's close, the low of 63.43.86. Now I can talk to you about a scenario. And the scenario is that you do not get major sell signals in the market until you get a theme that the market just recently thought was okay, or not a big deal, or yeah, it's okay. It's suddenly very seriously wrong. And when you get that theme, I call it the dark news cloud cover. It's got nothing to do with candles. It has to do with the news. The news itself says that, things are not right. The market doesn't like. Could it be TBT? Could it be the yields going much? It's hard to say because they're just stuck in a train wreck. There isn't anything. There are a lot of things sitting out there that could go wrong, but there are a lot of things that could go right. So I'm saying I want price to determine it. So this is the way I'm looking at it. Let's even go to the QQQ. The QQQ, the index 100, if it closes decisively under yesterday's low of 550, should I make that 558.84? I'm going to make it a little bit lower. If it closes under 555, if it closes under 555 tomorrow afternoon, that's going to be an issue. All right? So I'm just making it as easy as possible. Look at the Dow. The Dow you can barely see. It's like an eye blink. Oh, big deal. It's trying to turn down. It's down 112. Made a 45,207 all-time high 3 sessions ago. It's actually one of the leading indicators. But at this particular point, what I am looking at is, you see this triple top right here? There's 1, 2, 3. And you see it here, the same thing, Chapman Wave inside track, repeller zone. If the Dow, for whatever reason, it doesn't even have to close. It just has to tag 45,208. Make a new high, that's good. But if it goes to 45,220 or higher in the next week, that's really good action, right? So I'm giving you numbers. So the Dow has to really close decisively under 44,500 for me to say, okay, now everything's in sync, they're pulling back. Because what I want to see is the technical deterioration start very quietly and then accelerate because the bad news comes. If it doesn't happen, that's fine with me. But we're building up a kitty. We've built up money sitting on the side that we want to put to work for subscribers. I'll be back in a moment. Dow's down 139.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so look, this is a peak F in the 1-minute chart of the E-mini. It's only a leg B and it's coming down, but it could be a single leg A to the upside, the Eiffel Tower that goes straight up and comes down. If the look at this, it went right to the 200 period exponential moving average. Did you even need the 200 period moving average? Yeah, look at that. For at least 12 hours more, it's been tremendous resistance every time the price got there. I mean, you could use Fibonacci, you can use Chapman, you can do anything you want. Just this one indicator tells you resistance, 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 and now it's pulled back. So if at any point in the next day or so we start to break above 64.11, well, that'll have changed because it's a moving average, 200 moving average. But at any point, if it starts to get to the 64.15 area, that'll be very positive. I think this is going to be resistance for a little while. Now let's go back here. So a couple of questions came in. Another one was hog. About 3-4 years ago, maybe it's even more, I said, if only, I don't know if any of you did it, but as a kid, we used to take our bicycles and we would put a little flap on the spokes so that they would go brrr, like that, of course, drive everybody nuts. That was our job, of course, as kids, teenagers. And I said, I know that Harley riders want the power, they want the sound, they want that roar. But if they could do the same thing, manufacture it somehow, that would be fine. But if they went electric, look at the speed with which it can go from 0 to 60, and look how quiet it is. It could be fantastic. Why doesn't Harley Davidson instead try to recruit some of the bikers and really they could give them free the electric bikes. Let it become a popular thing because it makes sense. I mean, it makes sense to me anyway. And I remember on my motorbike when the exhaust would fall off every once in a while and it would drive all the neighbors crazy, and until I could afford to get the muffler or the baffles or whatever it is. So anyway, well, look at this. It's just horrible, but look at this huge arch formation in Harley. And it's above the left side low that was made back in 2020 at about 12 or so. I'll give you the exact figure. I should type it in here. The exact figure is March of 2020, 14.31. And where is it now? It's at 26.99, 14.31. So it's almost double, right? but it had gone all the way to the 50s. Something's not right. I really think that they've missed an opportunity here to turn something that's very negative for them into something really positive. But if Harley Davidson in the entire month of September, if by October Harley Davidson's trading above 30 maybe 31, and it's at 27 right now, that'll be the first sign that it can go to the 200-period moving average of 33 in the weekly chart. Wow, if it pulls back under 24, that's just a big problem. All right, done with that. Next question came in. Could I look at GDX? Oh, I did. I said GDX is looking really nice right now. Good breakout today. This is, so you remember I had this, what charts did I have it on? Was it silver? No, whoa, man, why am I forgetting what it is? GC? Or was it stocks? Oh, it doesn't matter. What I'm looking at here is GDX did pull back. It went sideways. It was close 3 days ago to pulling back, but I said, it's in a rectangle formation and the technicals are still very good. It should try at least to test the recent high. Well, today it broke out. And I just spent I'm not going to do it again, trying to listen to the recap because I did this with the weekly chart. I've spent the whole week talking about it, that these two bars in the inside track repellent zone saw the third bar come down in the weekly chart of GDX. This time it's holding really well. I said, what if it actually breaks above it, which is just done? So this is calling it a leg G, but it could even be a G/C. So this is nice action in the GDX, and it's different to gold. So just be prepared that the gold miners are doing way much better than the gold itself. Next question came in. Okay, I did that. Oh, and I missed a question. I'll get to it right now. Basil, please look at NAT. So NAT is Norwegian, Nordic American tankers. Yes, I've been following this. In fact, I knew that there was a problem today. I'm cleaning up my list, my watch list for my subscribers, and I took out, did I? Let me just see if I did. I was about to take out TK, that's TK Shipping. Did I take it out? Did I take it out? Did I take? Oh, I think I did. Yes, I think I did just today. And as I took it out, I said, uh-oh. And here it is, TK's up 26 cents, up 3.5% at 7.82. TK Shipping. This is really improving the weekly chart. And now let's go to Nordic American, trading up 8 cents, up almost 3% at 2.98. I absolutely agree with you. Something's going on, and it's favoring the shippers. And I looked at the shippers. I did a lot of work on the shippers, and then they did nothing. And then I thought, shippers. Look at this. Leg D in the weekly chart over the... No, not yet over the previous... I agree with you. I haven't had a chance to read what you've said, but the high of the week of the 17th of January of 3.02, today's high is 2.98. I like this very much, only in the sense that it's the first time that the data in the weekly charts have started to improve. The monthly chart is still pretty ugly. I like it. Let me just do the notation here. That was a peak D, down arrow. How are we doing for time? Yes, we've just got another couple of minutes. Here we go, one. So here's your A. This is an A. This is a beautiful example of the Chapman wave restart. There's someone I have to send this to. A, B, C, and restart should go to D much, much sharper over the bulk of the trading range. This is a peak A, gray B, because it's underneath the previous D. This spikes up. Is it an E? I'm going to take a chance and call it a C because the MACD turned up sharply. The relative strength is good. The stochastic hasn't got to 80% yet, but it is rallying to 61, and the on-balance volumes are tad overbought. I like it. NAT is a symbol. Up 2.98, up 9 cents as we speak. It's starting to move. Someone's listening, Dan. Yes, good eye. Now, what did you say? It appears to be on the verge of a breakout. Lots of oil soon to traverse the world by ship at high daily rates. Well, we don't know about the daily rates because if there's a lot going out there, rates might find there's a little competition. Maybe the Ukraine situation will not be resolved soon. BWLP. I used to have this notated, not anymore. Yeah, I stopped at that peak D. Now it's got another A. I don't even know what it is. I'm just going to do the notation, and then we'll be back. CD, call this an E. That could have been a B, but let's see. C, D, BW, LPG Inc., shipping and something infrastructure. And energy infrastructure, yes. Good eye, up at 15.88, up 28 cents. Good eye, BWLP. Thanks, Dan. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So this would BWLP, which is BWLPG. This would suggest, based on my bar symmetry, right there, that somewhere around mid-October, it will try for the 19.36 level. Wow, that's $4 higher. All right, well, I'll just put that in. I think that the next level will have to be this one here. Let's see if it's able to get there within either this week or next week, and that is 16.82. One step at a time, 16.82. Yeah, very nice. That's the weekly chart. All right, let's just do this. We've got just a moment to go. So what am I looking at here? I'm looking at a lot of consolidation taking place. You can go look. Here we go. Look, GE consolidating. Hasn't broken a new high. But nice candle today, up 5 at 271. Robin Hood. It's funny because I was saying to myself, is this a moment where we should just grab the GEs and the Robin Hoods, etc., because there's going to be a retest of the highs? I don't know. I would like further consolidation. What I am saying is that I think that we're going to consolidate for another, going into early next week, and then we're going to get some evidence to say either bad news infiltrates the market, which really sends it down, or we're just really going sideways with the upside fairly limited, but the downside also is really basically a rectangle time rather than price. I wanted for subscribers, I wanted us to have at least a foot in the short side, and that's what we've got. Not a big deal, but that's the way it is. I'm really hoping to be able to use the resources that we have. The list is just getting longer and longer of stocks that we would like to get. I'm going to whittle them away, try to take the best in every field. I think that the most important thing about what we're looking at for the move going into October, let's say, I'm thinking September, October. I think now quality is absolutely of the essence. So everything that you get now has to be really the best of the best in each group. I think now you have, if it's the little tiny price stocks, they have to be very special, like some of those biotechs. Maybe tomorrow I'll do